Good morning, Alen and Ash here from Agency One Real Estate, and we're coming to you to talk about tax depreciation today. And very important note that a lot of our clients ask us is, Alen or Ash, what should we be doing with our investment properties now to benefit our tax situation? So, Ash?
We've got Tuan here from Tax Quantity Surveyors. He's here to give us his knowledge that he has, which is wide and a lot, about depreciation reports. And I'm sure there's a lot to take in from this session for everyone, not just, investment property owners, even commercial property, shop fit outs, things like that. We'll talk about everything this time.
So I think initially we'll talk about, what is a depreciation
What is a
schedule?
depreciation? Yeah.
Sure. So my name's Tuan. I'm from Tax Quantity Surveyors. As a quantity surveying firm, we just specialise in tax depreciation. Tax depreciation is a cash flow tool that the ATO provides. So the ATO is providing this cash flow tool to help property investors minimise their taxes, right? So the whole idea is to work out the total building value of an investment property or a rental property or a commercial property in some matters, and working out what sort of depreciation we claim from year to year on these buildings depending on the type of assets they have. So what a quantity surveyor does, being a construction professional, we estimate the cost of construction as an independent advisor. Right. So we work with the banks to work out construction loans and act as an independent body to the banks. We also work alongside the ATO to help advise on tax depreciation. So in this case that we're talking about today, it's about getting a quantity survey out to the property, working out the building value of the asset itself, and as the building consisting of brickwork, framework, slabs, and roof, we work out at a 2.5% rate of depreciation what they can claim. So if you've got $100,000 build costs, you can claim $2,500 per year on that investment property.
And for how long can they claim that?
That will be a 40-year report at 2.5%. And also on top of that, not only do you claim the building value, separate to that is your plant and equipment. So plant and equipment would be things such as your carpets, your light fittings, your air conditioners. Obviously working out these things independently because the carpets might not last as long as air conditioners. So they have different rates of depreciation. So it's about getting a quantity surveyor out there to maximise that. So when you're buying an off the plan property, you spend maybe $275,000 on the build.
Yep.
We work out that the building component is only $200,000. The balance of that being $75,000 might be the plant and equipment. And because the plant and equipment maybe only lasts between 3 to 10 years, better than the 40 years, it then improves your tax depreciation rate, and then you're getting more cash flow back in the earlier years. So that's the benefit of the tax depreciation schedule.
The biggest myth we have with the industry, with people talking about investment properties, is we can claim depreciation only when it's a new property. Is that true?
That is a bit of a myth, and to bust that one is I would like to, reinforce the idea that the ATO does have a cut-off period for building depreciation. That cut-off date is the 19th of September 1987. It has to be built from that date in order to claim depreciation. So if you go and buy a second-hand property today and it was built from that date, anytime between now and then, you are able to actually claim 40 years of depreciation from 1987. So if you bought the report today, 2019, you'd still be able to claim till 2027.
Fantastic.
So another
8-9 years. So that's a fantastic point to know.
So we've got clients, they buy their investment properties, say, and it's 12 or 13 years old, or it could be sometimes 20 years old.
Yep.
So it's recommended that they contact this lovely man over here in order to get a depreciation schedule.
It's probably also worth noting, Alen, on that as well, is that you can actually, as an individual taxpayer, you can actually go back and amend 2 years worth of tax returns. Something worth noting when you're going to see your accountant. Yep. And for companies, I believe it's 4 years you can amend. So if you've already bought an investment property 5-10 years ago, you can still go back and still claim 2 years, and also the future years moving forward.
Yep.
So that's excellent to know. Yeah.
A lot of people don't know that. Yeah. Now, another question that we have is, let's say, for example, a client buys a property. They had a tax depreciation schedule done, let's say 10 years ago. They make a few renovations to the property, so they make good of the existing home. They build a granny flat at the back of the property. And they're using their old depreciation schedule.
Yep.
So what would you recommend there?
Yeah, so if you've got a granny flat that you've already got a house on the main house.
Yes, that's right.
You've been depreciating it. you've done a renovation to it, you then decided to tack on a new granny flat to
Yes.
improve the cash flow on that premises, what I would suggest to do is get a quantity surveyor to review the renovations, because once you renovate that property and you spend say $30,000-$40,000 on a basic renovation to put in new kitchen, new bathroom, some new carpets, maybe
Yep.
an air conditioner,
Yeah.
well, all the plant equipment is still claimable as a brand new asset. So it's treated as if it's a
That's
brand new
excellent.
property.
Okay.
Fantastic.
And on top of that, granny flats are treated like brand new assets as well.
Absolutely.
And it's also then you're getting good cash flow on both front and back. You also save on the fee of the report, of course,
Yep.
because we only do one visit to the property, and we split that inspection fee across both. So you actually get a saving on that.
Fantastic.
Yeah.
There's been some changes with the legislation of depreciation reports. Are you able to just tell us a bit more about that?
Sure. So the 9th of May 2017, the federal budget had an amendment to it, and what they tried to do was to, I guess, mitigate the recurring problem of people depreciating used assets over time. So prior to the 9th of May 2017, and it still applies today because it is grandfather, if you had bought a property before that date, you purchased a property and used it as a rental property, you were allowed to claim a piece of carpet or the carpet throughout the house over and over again, even if you were the 4th consecutive owner of that property. Okay, so even if it was second hand, you could claim it over and over again, and you can still do that today as long as you are you purchased that property before the 9th of May.
Right.
The 9th of May legislation says from that date, if you purchase a property, the exchange date, if you purchase a property after the 9th of May 2017, you are no longer able to claim depreciation on second-hand plant and equipment of a rental property that is a residential property
That is a residential.
owned under SMSF or as an individual. If you buy the rental property under a company or as a trust, I think a trust fund, you're fine to do that, but SMSF and individuals are excluded. So they're no longer you can claim.
That's
Commercial
something
properties
a very
are
important point for everyone to note on that.
Commercial properties are exempt, but
Yep.
I think we can go into that a little bit later.
Yes,
And that is one of the perks of buying commercial, where we can still claim depreciation on second-hand plant and equipment as
And
well.
we'll be covering that in future discussions with Tuan as well.
Sure.
But thank you so much for today's video,
for
Tuan,
having
and
us.
I'm sure we are going to continue this conversation next week as well, and we will talk more about depreciation schedules because there's so much to cover off with it.
And if you would like some more information in regards to tax depreciation and would like to speak to an expert, we'll have Tuan's details at the bottom of this Facebook post and Instagram post. Feel free to give him a call and have a chat. All the best, guys.
Thanks
for
so
listening.
much. Have
All
a
the
good
best.
Sunday.